If there's one indicator that traders watch out for, it's the yield curve. Today we have a very special situation where the Fed has been backed into a corner. They know that they're about to cause a recession, but they know that they will hyperinflate the currency if they continue to print money. This should be an interesting one. You came here for the truth, so let me unveil that for you. Today we're going to look at several economic indicators. I'm going to show you the yield curve. We're going to talk about currencies. We're going to talk about the stock market and so much more. Let's begin. Fed funds rate tightening and the yield curve from 76 to 2018. Take a look at this chart here. It might be a little difficult to read, but essentially what I want to show you is that every time we have these two events, we have a recession that follows. Number one, when we had the Fed increasing interest rates, a recession follows. And number two, when the yield curve inverts, we have a recession that follows. Okay, so this period where you see the gray shaded areas, that's a recession. So every time you have the Fed's increase in rates, you have a crash. It happens every time. Now this yield inversion, also the same issue. You'll see that with this darker line here. Am I saying that as soon as that yield curve begins to invert, the next day there's going to be a crash? No. Am I even saying that 100% certainty there's going to be a crash because of this yield inversion? That's going to be sort of that trigger. No. But traders watch this as an extremely important indicator. This is what they are looking. And when I see it for myself, I like to add it to all of the other indicators that I am paying attention to on a daily, weekly, or monthly basis. Keep that in mind. That's all I'm going to say. For those who don't know about the yield curve, I'll quickly explain it here. That has taken the yield curve as measured by the difference between the 10-year and the 2-year Treasury yields to just 0.4 percentage points, the smallest gap in over a decade, and it has taken it that much closer to inverting. The Fed, by the time you watch this, may have already increased rates, and it's going to push it closer and closer to that point of inversion. The yield curve last was inverted in 2007, just before a recession. It also inverted in 2000. They've got some big changes coming up, and I think that as soon as we get that inversion, that things could definitely start to get a little shaky in the markets. The traders are worried about it. The algorithms, I'm sure, are programmed that as soon as that happens, something's going to be triggering. Okay, so let's keep our eyes peeled on that, definitely. Now the CAPE is something that I show regularly, and I try to bring it up at least once a month or so to track the progress of it. But the CAPE is the cyclically adjusted price earnings ratio. This is one of the more important indicators of a stock market bubble. You'll see that we are currently at about 32. On average, it's about 16 or 17. And this has shown us that we have gone past 1929. We've gone past what we saw in 2007, 2008. And of course, we are heading towards the dot-com boom and bust. That's the type of level we are approaching right now. And everybody knows how silly that was. When you look back into the pages of history, books have been written about it. We always refer to it. Oh, what a crazy time. But we're heading there now. Oh, it's not a crazy time now. It was a crazy time back then. Well, I'll leave that up to you. The IMF always likes to stick their nose into everybody's business, and here Christine Lagarde said that the risks to the global economy are rising as major industrial nations sharpen threats of a trade situation. The clouds on the horizon that we have signaled about 6 months ago are getting darker by the day, and I was going to say by the weekend. She's making reference to all of the whole G7 summit that took place, and with this whole G7, I have to just interject the fact that nothing ever really gets done. It's more of talk, and it's more of just political BS and garbage that we're just, they've try to make it seem like there's, oh, this photo op is happening and it's so bad, it's so good, it's so peaceful, it's so not peaceful, and we're being told and we're being pulled left and right, and I don't believe a single damn thing that happens there. Wages and salary accruals versus the GDP. If you measure something in US dollar, you get one picture. But if you start measuring it in something else, You get a completely different picture. Okay, measure it in gold, measure it in shares of the Dow, measure it in, anything. You start to get a different picture. Wait a minute. It doesn't look so good, does it? Or it looks really good. So I thought this was interesting to see how this has really declined over the years. If I were to take my wage, let's say, I could, oh wow, it's been increasing over the years, but measured in in this way, gives us a different outlook, gives us a different perspective. Malaysia here, they decided to crowdfund for money. It's certainly better than what the average government comes up with. Take a look at this here where you can see that China has been partnering with other countries. At the same time, you have the G7 issues going down and they're fighting. They're having all this argument back and forth. We have China doing business with all of these other countries, particularly in Africa. They've been doing a lot of business and things have been really good. Take a look at this article. The use of the yuan has come in handy because China was given loans to the region and other African countries. One of the issues we discussed, though, was that sometimes if you borrow from China, they want to bill you in US dollars. Now we are saying our government must start discussing with Chinese enterprises and governments so that we're billed in yuan, and then we can pay in yuan, because there's no point if we keeping our reserves in yuan, but we're billed in dollars. It's no good. So here they are doing currency swaps with these countries here. They are engaging in business in yuan. They are going around the dollar. It's huge news, and it's not being put out there on the front page because, oh, it's Africa, it's not a big deal. It is a big deal, and this is something that we need to be watching. And a little fun thing just to finish off the video here, price of a pint. I thought it was interesting to see all around the world what the price of a beer costs. And lo and behold, I was shocked to see my friends in the land down under, expensive beer. I thought you were beer drinkers. Well, Toronto is even cheaper than some of these areas down here, which surprised me. Lisbon, Portugal, my friends, cheap beer there. And we see that, of course, Dubai is expensive. That's expected. We have South Africa being quite cheap. Mexico City is quite cheap. And some other areas. But I also wanted to look at this because it's not just what, the products that need to be imported and the process that's involved. It's just a matter of how expensive is that particular place. Here on the list version, I could go through it just very quickly, and I'm noticing places like Singapore, Zurich, New York City, San Francisco, Paris, and so on. These are very expensive places no matter how you look at it. So that's something to note as well. Look at the commodity, look at the thing you're pricing in, and then realize what are other things in that region, how much do they cost? Is real estate expensive? Is electricity expensive? Food prices? And so on. That's something else that I wanted to touch on just to compare. Now, I don't necessarily think that all of these are accurate, but perhaps they are accurate in that together they make up this list. And so something at the bottom of the list is definitely where it should be versus the top of the list. I don't necessarily agree with all these prices, how they developed all these prices and everything else. I just look at it for what it is. Toronto, they're saying that this particular item is cheaper than it would be if I bought it in Hong Kong as an example. That's all for this video. If you found it informative, please give me a thumbs up. Last but not least, if you found the video informative, I know that you will find my books even more informative. This is the financial education you are not taught in school. You go through all of those years, you don't learn a single damn thing about your financial education. So that's why I took the initiative, read all these books. I listened to thousands and thousands and thousands of hours of seminars, went to seminars, did my due diligence, invested my money, spoke to people on the inside, spoke to people on the outside, got what I needed to write these two books. They fit into each other like puzzle pieces. They're not necessarily one or the other, so I definitely recommend both. But between the two of them, you will learn so much, I assure you. So you can actually flip through these books at Amazon. There's a link in the description below if you want the audiobook version. That's available at themoneygps.com. Take care.